My name is Solomon from Tiny Tutor-Tube, and welcome to this beginner's guide to Forex trading. So, whether you are a new person, or maybe it's your first time to trade, or maybe looking to refine your skills, this tutorial will, of course, provide a comprehensive understanding of the Forex market. So, trading strategies also, you will be able to learn on this, the risk management techniques, and essential tools to help you get started successfully. Forex trading, we must note that is the largest financial market in the world, so operating 24 hours in a day and offers significant opportunities for traders who understand its dynamics. So in this tutorial, I will be able to offer or maybe cover the following just to highlight the basics of Forex trading so that you can understand the key market participants. Also, the essential trading terminologies. What are the terms that are commonly used in trading? So, also trading strategies, also risk management techniques, the trading psychology, how to trade Forex trading. Very important. So, let's dive in and explore the world of Forex trading. So, we begin with the introduction on what is Forex. So, foreign exchange is the long form of Forex. So this is trading. This is actually a forex market. You can see is trading is a global marketplace whereby people are able to exchange national currencies. It's a decentralized market where traders buy and sell currency pairs to profit from price fluctuations. So how does the forex market work? How does the forex market work? We need to understand this. So the forex market, like we said, operates 24 hours a day across different time zones. So the currencies that are traded include maybe euro, US dollar. Uh, we also have GBP, JPY, that is Great Britain pound and Japanese yen. Also, we have the price of a currency pair fluctuates based on supply and demand. Very important to note that. Then we have we need to note the major currencies, major, minor, and exotic currency pairs. So on the major we have these are the most traded pairs, always including the US dollar or what we call the USD. Like uh, if you can see my cursor here. So this includes the euro US dollar, also the USD, Japanese yen. So we also have other pairs that are minor. These do not include the US dollar, but involve major currencies. So like now the euro and then the GBP or what we call the Great Britain pound. Then we have Australian dollar and Japanese yen. So and then again we have others that are called exotic pairs. So this one involve a major currency and a less liquid currency, e.g. the US dollar, uh, this and the euro TRY, and then USD ZAR. So when you familiarize yourself with this, you will be able to know what these uh, pairs mean. So then we have this is just to demonstrate or maybe helping you to understand the currency pair types. They are they are defined into three: exotic pairs, the major pairs, the minor pairs. Like I've explained in the previous slide. This. Then we have who are the key players in the market in the forex market. So we have banks and financial institutions, the biggest players in forex. These are the biggest players in forex. So and they highly influence liquidity. So then we have retail traders, individual traders trading via brokers. Like now, if you were to trade today, where would you fall? Ask yourself. not a bank. You're not a bank, maybe a retail trader. That is where maybe you would fall in. Then we have central banks. So these influence currency values through monetary policies. So we also have corporations and investors. So these ones engage in forex for business transactions and also investment. So then we can have that demonstrated in that shared influences in forex trading, the market influence. So we have central banks, and then we have banks and financial institutions on this other side. So that is just to demonstrate on how different institutions are able to influence the forex trading. Then we have basic forex terminologies. What are the terms that are commonly used in forex? So we have currency pairs, or maybe what we call base and quote currency. So for the base currency, the first currency in a pair, like for example, the euro in the euro US dollar pair. And then we have the quote currency, that is the second currency in a pair. For example, as demonstrated here, is the USD in the euro US dollar pair. This one, you can be able to see this. So, and then again, we can proceed to understanding. How do we understand the currency pairs in forex? This we have the currency pair, then we have that is just to demonstrate on that. The currency pair, the base currency, like I've explained, the quote currency, then I've given the examples. So, and then again, we need to understand what is bid, ask, and spread. So, what are these? So, the bid price is the price at which buyers are willing to buy. Yes, and then the price at which sellers are willing to sell, that is the ask price. The spread is the difference between bid and the ask price. So that is where the broker's profit comes in. So then on the spread, I must note that later in this tutorial, we'll be able to explain maybe what are the factors to consider when using a broker. So maybe depending on the spread. For personally, I encourage that you may use brokers that have very low spreads, because it means that is they are making very low profits and you are losing very little. So and then we have that is just to elaborate on the same. So understanding forex pricing dynamics. So what is spread? We, like I said, that is the difference between bid and ask price. And then we have the ask price. They are demonstrated. The price sellers are willing to accept. So the other one is the bid price. Then the price, we say the price buyers are willing to pay. These. So then we go to more explanation on what is a margin. We need to explain on this. So this is the deposit required to open a leveraged trade. Then we have the margin call, a broker's warning when an account lacks sufficient funds to cover trade. So normally some of the brokers will send you a message to tell you that the margin is below maybe a certain percentage, so that maybe you can do the necessary or you can take the necessary measure to secure your account. So, and then how to manage funds effectively in forex trading. So that is just to elaborate on the margin and the margin call. So these the margin call alerts for insufficient funds, and then we have the margin that is enables leverage trading. I think I mentioned earlier. So and then we have next on, we need to understand the forex market structure. So like we can say the forex or the forex is traded over the counter, that is OTC, without a central exchange, and then it operates in a decentralized manner. so involving banks, brokers, and traders. So we need to note that. That is just to add on what we have been covering. So then we have that uh, illustration. So collaborative trading environment, decentralized trading, over-the-counter market structure here. So and then we move on. So what are the trading sessions? What are the trading sessions? So we have London session. So that is from 8 a.m. to 4 p.m. GMT, and this is the most liquid session. So maybe you may want to to ask what is a session, London session. Maybe you can see 8 a.m. to 4 p.m. GMT, and then we have New York session. That is this overlaps with London, and it has a very high volatility. Then we have the Tokyo session that focuses on Asian currencies. That is from 12 a.m. to 9 a.m. GMT. Then we have Sydney session. So this is from 10 p.m. to 6 a.m. So that is GMT. So that is the start of the Forex trading day. Then we have that as an illustration. We have that how it goes from Tokyo, London, New York. Then we have Sydney. So what is the role of brokers in and trading platforms? So what is the work of a forex broker? So these the brokers, or what we call the forex brokers. These ones provide access to the market and offer leverage. So leverage, maybe in layman's language, I would say it's a loan that maybe you are given to be able to trade more, depending on maybe the amount that you have. So we normally see the higher the leverage, the higher the risk, because that gives you more money, like you are given more money to trade. So if you inject very high volume to trade, then it means you are entering a very risky position. So then we have trading platforms. We have MT4, that is MetaTrader 4. Then we have MT5, that is MetaTrader 5. Then we have the trading view or the C trade. So then again we go to that is an illustration to enhance on that, or maybe to elaborate on that. From the forex brokers, we go to the market access, leverage, then the trading platforms. We have them MT4, MT5, trading view, and the C trade. So we can say what is we may want to say we might want to talk about types of forex trading strategies. We have scalping, as illustrated here. We have scalping. Uh, this is trades held for seconds to minutes, and this one aims to take small profits frequently. Then we have day trading, what we call intraday profit opportunities. So these ones trades opened and closed within the same day, no overnight risk. So we also have I've explained on this the day trading intraday. Then we have for the risk management explanation, we have explanation of avoiding overnight risk. What no overnight risk means is that you avoid overnight risks. Yes. So by closing the trades within the day. So and then we have trades. These are the trades executed in one day. That is intra trades. So the swing trades, we have that. These ones are trades based on market swings and trends, and also requires technical and fundamental analysis. Maybe if you are not able to understand exactly what is technical and fundamental analysis, you may let know via the comment section. for this tutorial. Then we have that the analyzing forex market trends. We have market trend analysis. We have technical analysis and the fundamental analysis. Yes. So then we have long-term trades. These ones trades held for weeks to years. Then relies on fundamental analysis. Then we go to fundamental and technical analysis. So like I said, if you are not able to exactly tell what is technical analysis, fundamental analysis, maybe from this explanation, you may let know via the comment section. For this one, the fundamental analysis, this one evaluates the economic, political, and financial factors affecting the currency prices. So the key indicators could be like the GDP, interest rates, the inflation, also employment reports, like the NFP, non-farm payroll for the US people or for the American people. So we also have the central banks, Federal Reserve, the ECB, that is the European Central Bank, the BOJ, sorry, influence forex markets. So then we have the technical analysis. So this one uses past price movements to predict future trends. So we have the chart patterns. So this is head and shoulder, okay, double, top, or maybe bottom. So candlestick patterns, maybe we might use the engulfing or maybe the hammer doji. You will be able to learn that as we move along. So then we have the indicators, the moving averages, the RSI, MACD, the Bollinger Bands, but mostly the ones that are used are the moving averages and the RSI. RSI is the relative single index. You will be able to see that. So what are the strategies that are used for the trading? So we have that the chart patterns, the candlestick. That is just to illustrate on what I've presented. Then we have risk management in forex. So what we say is what is stop loss, right? So this the stop loss, this one limits losses if the trade moves against you. So then the take profit locks in profit at a set level. Let's say you may say maybe take profit after 20 pips, 50 pips, maybe depending on how you view the market or maybe depending on your analysis. Then something that I may want to add on that is maybe it is very important to do stop loss and take profits because that now helps you in risk management while doing trading. We have that illustrated there, how it is supposed you enter a trade, you either set stop loss, you either set take profit, then you do the trade execution, then you evaluate trade outcome. Then we have risk reward ratio. So this one ideal ratio is 1:2 or higher. So risking meaning $100 to gain $200. So position sizing, also we have that, and money management. So risk only 1 to 2% of account balance per trade. Then avoiding over leveraging. So high leverage increases potential losses, like I had explained earlier in this tutorial. So then we have psychology of forex trading. We have that how do you control your emotions? How do you manage your fears? And maybe how do you are you able to trade without greed? So fear leads to premature trade exits. It also greed leads to overtrading and high risk taking. Probably you can feel like you used a lot size of 0.02 to trade, and because of your maybe something like I may say you are greedy, and then you increase that lot size to 0.05. Yes, and then maybe the trade goes against you, then it means you are going to lose more. So greed We need to control emotions while trading. That is very, very important to note. Then we have that is just an illustration to show how you're supposed to overcome emotional barriers in forex trading. The fears, avoidance of risk, maybe premature trade exits. Then these ones directly affect or maybe influences the emotional uh, trading decisions, or maybe the decisions that you make while trading. These ones directly influence this. So there we have high risk taking, over trading, greed also, like I mentioned. Then we have what do we do? What do we do to manage all this? Then we can consider sticking to a trading plan. So follow entry and exit rules. Avoid impulsive decisions. Maybe those that are triggered by something. Yes. You also need very, very high discipline to be able to manage your risks. So forex, you need to adhere to predefined trading guideline, and then making calculated and thoughtful choices, right? Then how do you handle losses and trading discipline? So losses are part of trading. Keep emotions out of trading decisions. So then again, we go to how to start trading forex, right? So one thing that you need to note is you choose a reliable broker. Like I said, maybe depending on the spreads, the leverage that they are giving you, the regulations also, maybe by your government agencies. Maybe now you can do that first on a demo account. You can trade using virtual money on a demo account. Then after maybe getting the confidence to go live, then you can now have a live account and trade now with the real money. So, and now what about understanding order types, right? So we have the market order. These ones are the ones that you execute immediately at current price. Then we have the limit order. These ones you execute at a specific price. Then you have stop order. These ones executes when price reaches a set level. That is, you could have a buy stop or maybe a sell stop. So placing, what triggers you, or maybe what leads you to placing your first trade? You analyze the market. You also set stop loss and take profit. Then you execute the trade. Yes. An analysis of the market involves maybe checking for maybe upcoming news, maybe like the non-farm payroll, for example, maybe unemployment rate, maybe if you are using the USD currency, a pair that has USD, you can check on that. You analyze the market using that method of checking whether there are upcoming news. Then you do that. This is just to elaborate on that. The forex trading process. You analyze the market. You set stop losses and take profit. Then you execute the trade. What are the common mistakes to avoid trading? So one of them is over trading. Then too many trades lead to unnecessary losses. Then how to manage trading frequency to avoid losses. You trade mindfully. Then this one reduces risk of poor decisions and financial setbacks. Then overtrade, you increase, or rather, this increases risk of avoidable losses due to excessive transactions or trades. Then what we can talk about trading without a plan. So this leads to emotional decision making. Then ignoring risk management, not using maybe stop losses increases your risk. Then chasing losses, trying to recover losses leads to reckless trading. Then we have useful tools that you can use to trade, or maybe the resources for forex traders. We have trading platforms. We have MetaTrader 4 and 5. That is what we call MT4 and MT5. These are industry standard trading platforms. Maybe depending on what strategy you prefer. There are those who will prefer MT5 to MT4. Then we have the trading view. This is best for chart analysis. Then we have maybe this is just to demonstrate on the tools for forex success. Maybe you can also include books, maybe to read. There's one maybe Trading the Zone by Mark Douglas. You can also use YouTube, maybe to watch forex tutorials and live market analysis. Yes, on this. So economic calendar and news. How do you use this? This is a forex factory. So economic news and impact analysis. Where do you view your maybe the news and all that economic news for from the economic calendar? So then we have my FX book. So track and analyze trades. So the learning resources, like I've said, the books, that is Trading the Zone. This is a very common one by Mark Douglas. Then you can also use maybe YouTube to do forex tutorials and maybe live market analysis. Then maybe in my previous tutorial, I had done a video on uh, a trading robot and automated trading. You can check on that in my previous tutorial. So forex robots, or what we call the expert advisors, these ones automate trading strategies. So these ones are used in MetaTrader platforms. So if you have a forex robot, or maybe the expert advisor, what we call the expert advisor, you may require backtesting and risk management. Backtesting is to check how the expert advisor would have performed if it was used maybe in the previous time, like let's say 1 year, the past 1 year, or maybe depending on how you customize that. So forex robots in the trading. So you use forex robots in different MetaTrader platforms, MT5 and MT4. Then you do backtesting. Then you can do your risk management. Yes, on that. So in conclusion, I want to highlight that I would like to say that forex trading offers significant opportunities, but also requires knowledge, discipline, and risk management. So it is very important to start with a demo account. So and then develop a strategy and continuously learn to improve your skills. So with patience and consistency, you can master the art of trading and potentially achieve financial success. So thank you for following this forex trading beginners guide. So if you found this tutorial helpful, be sure to like, share, and subscribe for more insightful content on forex trading and financial markets. Stay patient, practice regularly, and never stop learning. Best of luck on your trading journey. Thank you.